why don't we start by learning a little bit about each of your projects, and then we'll just move into some general questions and go from there. So why don't we start on the end? Ryan, framework it was referenced actually on the real estate panel earlier. Why don't you tell us a little bit about that and also your background with Distributed Global and how that fed in?
Sure. So I'll actually start with the background piece because I think it'll kind of go right into the framework side. So I'm a co-founder of a firm called Distributed Global. We're a crypto asset management firm, more of a VC. We invest in tokens. We also invest in equity. My two partners set up one of the earlier crypto funds back in 2013, 2014. Same vintage as sort of firms like Metastable and Pantera. They were based down in LA. Actually came from largely outside of the technology community and just started going to Bitcoin conferences. I got really fascinated by the technology. Fell in with the crowd that were sort of trying to build on top of Bitcoin. So projects like Counterparty, et cetera, who eventually said, hey, we really can't do what we want to do on top of Bitcoin, and ultimately tried to launch other projects. So they were early backers and supporters of the Ethereum project and a bunch of others like that. And so I was actually at the time not involved, running a fintech firm, and became an LP after I sold that company, and eventually came on full time to start the next version of the fund. Back then it was called something different, but we relaunched it as Distributed Global. And now we run a fund that's a predecessor to, or the follow-on to that fund, Fund 2, which is basically a $75 million token fund, and then we also have a VC vehicle as well. We structured all of that a little differently than most straight investors. We said, this is a really interesting category. This technology will unlock some really unique applications. It's going to be very difficult to predict what those applications will be, and in some cases we might have a thesis for the space where we couldn't find a team that we could invest in, where we would try to go out and recruit a team and educate them on the potential for the opportunity in the space. And so we structured the whole business as a holding company rather than as a fund. And we, in a couple of cases, have started businesses in the space, recruited management teams, helped them raise capital, helped them hire teams, helped them hire engineers, landed them their first handful of clients. And so we've done that a handful of times over the last couple of years. And the most recent incarnation of that is a platform called Framework, which is a commercial real estate issuance platform and investment bank. And that is just getting off the ground now. Should have something to announce here in the next couple of weeks. But I think that market is super interesting, which is why you see a lot of activity there, because it is a category that historically hasn't had much liquidity. And there's certainly a lot of interest globally in investing in high quality commercial real estate assets. But people who have largely been locked out of that market. So that's a category that we're particularly excited about, and it sort of aligns with our overall vision for the space, which was that what we're really building here is a new financial system built directly into the internet that allows you to transact in any scarce real world asset. And so that's what Framework's all about.
Fantastic. And after you do the intros, we'll dive into the thesis and what sort of assets you're looking at. But we'll move on to Carlos. I remember my very first call with Carlos some time ago.
A year ago.
Around Spice VC. And I remember, Blockchain Capital had come out and Carlos called me about Spice VC, and I was like, wow, this is going to happen. It's gaining some momentum. So why don't you tell us about Spice VC, and then of course you work with Securitize as well.
Good. So the idea of Spice VC came when I was doing for 2 or 3 years more enterprise blockchain related works, and so I became familiar with blockchain and started looking at the ICOs. A friend of mine, Brendan Ike, had done the Brave ICO, which was a kind of an eye-opening for me. And then in the past, I had done a lot of VC investments myself. I have a fund in Spain co-invested by European Investment Fund. I'm an LP in 2 funds. So I was acutely aware of the issue of the lack of liquidity in the space. So when we saw what was happening with the ICOs, we kind of saw the opportunity of why don't we create a liquid fund. So we started discussing this around April timeframe, and then, as you said, I saw in May that Blockchain Capital actually did it. And I was like, well, this is great. These guys, have the same vision. So we look in detail about how Blockchain Capital did it and kind of found some holes in the processing, how the token was designed, how the platform they used to actually issue the tokens. I went myself and bought tokens on the secondary market with my email, and this is security, so it's obviously something you shouldn't be doing. Then they also got traded in Ether Delta, so actually you could even buy without an email, just with a MetaMask. So we went around when we wanted to tokenize SpiceBC and start looking at who could actually provide the tokenization services, and couldn't find anyone that had a platform or a product ready. There were companies talking about it, but no one actually had products. And then we decided to basically hire a bunch of engineers, CTO, and then start tokenizing Spice ourselves and building the technology platform. At the time, I remember you started talking about the real-world tokenization of assets, and we used to have a quote from your first paper so in our presentation. So we were really excited about the project, and in October last year, I went out, wrote a couple of Medium articles about how we have improved the model of blockchain capital with the SpiceBC, and about how was the investment process in SpiceBC with screenshots of the platform, and lots of people contacted me and said, like, wow, this is very cool. So who is providing you the platform? And I say, well, it's my platform. We built it ourselves. So we started, companies started approaching us, and my co-founder for Securitize, Jamie Finn, he had been an early investor in the fund, and we decided then this is a good opportunity. We have a liquid fund that we're moving forward with it, but then the technology we've built could be used by other people because security tokens, we believe, was going to be a very big thing. So we spun out Securitize as a separate project. The company was founded in November and launched publicly in January. Since then, obviously, the industry has completely changed. When I started talking about security tokens back like a year ago, it felt very lonely. People were telling me, why do you waste your time? Just do a utility token and sell it to retail investors. Why would you bother with global compliance? I was like, well, I don't want to go to jail, so I think that this is better if we do it this way. So now the industry is very different. There's conferences dedicated to this. We have dozens of customers. Exchanges are finally launching, which is the missing piece. So I think it's it's very good to see how this early vision that we had about tokenizing real-world assets is becoming a reality.
Great. So Greg, I met at Block then. He was on stage talking about the JCO and around Finova Financial. And why don't you take us through kind of, starting from there, and then, of course, the newer entity, the Institute for Blockchain Innovation, and the way they're looking at potentially fundraising and that type of thing.
Yeah, so it's funny, I chuckle with Carlos, because yes, it was very lonely 2 years ago or so, and I would actually even get hate mail of suggesting that we should have some sort of compliance around this, because I think it could be a problem. And I've been a fintech entrepreneur probably for the last 40 years, done most of my stints running venture-backed companies. And I kind of got into blockchain. The one corporate gig I did was I was a CEO for a joint venture between MasterCard and Telefonica, and ran their global mobile financial services. And at that time, I have 5 kids, live in Florida, and my eldest is a big gamer. This is like 2012. And so he had really good platforms, and I said, why don't you mine Bitcoin with these platforms? And so we got a bunch of him and his buddies together to mine Bitcoin. I'll never forget, all the parents would call me up and say, what are these kids doing? Is this like illegal or whatever? Like, no, and of course at that time nobody really cared. I was like, it's a good thing to learn or something. And so kind of fast forward to today, all those parents I'm their best friend because they paid for their college and their house and everything else. And that's kind of how I got involved. And so when I started Finova, went down the traditional venture path. We're basically a consumer finance company that does everything digitally. We've raised about over $100 million in traditional venture capital and private equity. But when the whole ICO stuff was happening, again, I think a lot of us had the same kind of aha moment, saying, like, this is really a huge change. But unfortunately, I think it's going to be ruined because there's people doing things that are certainly not compliant with laws, and that probably will not help set this industry up. And so myself and at that time, Jeremy Gardner, who did one of the first ICOs, Steve, and a bunch of other folks got together and said, let's figure out if we can't put a framework around this kind of ICO concept to have the benefits, but do it compliantly. And that's how the Institute of Blockchain Innovation came about, which is basically, it's kind of weird because everybody says, like, what do you guys do? And Carlos is a member, and we announced the other week that we now have a lot of the main security token folks and all the platforms, Chris and Trevor from Polymath, and Mason, who's just up here as a member. And the idea was pretty simple. It's like we put together like 100 people on a global basis and just discuss this stuff and try to figure out how this framework should work. It's that simple. We're not starting conferences. We're not trying to sell stuff. And we have kind of meetups. And so that was the first initiative we had. And we're going to open source the documents, the legal documents. You can imagine we spent close to $1 million at this point in just setting up the documents, but the idea was to open source this through the JCO to other folks. And then fast forward to today, we've looked at another problem, or what we see as not an issue, but like I think the security token space is between two worlds. One is the hardcore crypto world, which we have a lot of people in the IBI who are from there, but I want 10,000% return and I want it in the next 30 minutes, right? So those return days are probably over. Most people have realized that, but still everybody loves those days, right? And they were good days. And then we have traditional investors, right, who've kind of heard this kind of blockchain crypto stuff, but they're not exactly sure. But I think they are interested. And I think security tokens sits in the middle. And so to sit in the middle, I think one of the biggest things is you have to have a very compelling value proposition to the investor to do it, because there's other financial products available. And so with the IBI, one of the things that we've learned or found out, what we believe is one of the potential apps for this is private credit, but high yield secured private credit. And the reason we say that is because generally this is an asset class that's been restricted to like billionaires and private wealth managers. And so like in Finova, we had the guy who's the president of Apollo, the hedge fund, provided the capital to us, so he would fit that category. But you can democratize that where it could be available to everybody. And so that's one of the initiatives with blockchain crypto partners we're working on now.
Yeah, I thought this open sourcing of the legal docs was such a key piece, because I come from a startup background, and startups a lot of times don't have a lot of capital. And so making these available is really key. I do want to continue this thread about democratization of ownership and just the kind of chat about, if the concept of this panel is where's the money coming from, let's talk about institutions versus retail. So, when you went through this process with Finova, and then we can maybe just go right down the line and kind of talk about where are you seeing the money come from. How are you, was it a Reg D offering, so it was only accredited, or how did you see kind of institutions versus individuals, and maybe those were accredited individuals?
Yeah, so I guess the first thing I think that's just a misconception is that putting security token on something makes it easy to raise money. That's not true, okay? So actually, we have lots of Silicon Valley VCs who are behind us and private equity guys, and they keep telling me, like, why are you doing the security token stuff? We'll just write you a check for the Series C and it's over. And I was like, well, you're right, but there is a fundamental change going on here. I'm an old man at this juncture. Most people here are young. And so I do think this is a fundamental change. So I think, though, that right now we're seeing people now talking, especially like family offices, et cetera, are looking to allocate a small portion of their asset allocation to this. And I think we're at the very, very beginning. And so I think that we'll see this grow exponentially. And I also think at the very beginning days, and Carlos, I don't know if you remember Ryan, is like VCs basically, as much as they tell you they were not interested at all in anything with ICO or blockchain or token, like now everybody.
Nothing with a token.
Now all of a sudden everybody is.
This has changed.
But if you went back 2 years ago, they were all telling you you're crazy, right? So I think that's changed a lot too.
So Carlos, you've seen a lot of offerings through Securitize. I'm interested in your comments on institution versus accredited retail.
Yeah, I think today I agree with Greg. It's not necessarily easier to raise money as an STO versus traditional equity, but it's true that you raise from different sources, and I think this is going to change even more. Certainly, you get money from people you don't expect and people you don't actually have never met. Like I remember in SpiceVC when we opened up the security token offering for investment, and suddenly you will see someone send a few $100,000 in Bitcoin, and it was like, wow, I've never actually met this guy, and he's giving me all this money. And of course, they sign a security and it's all legal, but in a traditional way, you will never have found this person. So I really believe in the concept of democratizing access to capital. I think security tokens are kind of like equity crowdfunding on steroids because they are global offers for the most part, which is a very powerful thing. I think that, as Greg also said, the problem is being in between. So the crypto people are still skeptical about security tokens because they think that the same returns are not going to be there. And more importantly, liquidity is still not there. I think when liquidity comes, it will completely change the perception of people. And for traditional investors, we have seen success with high net worth individuals, former entrepreneurs that have money, family offices, etc., but not really with funds yet, or with traditional LPs. And I think the reason is also the name. I'm putting here a proposal for the next year of the conference. Don't call it Security Token Academy, call it Digital Securities Academy. Because the word token is contaminated because of all the illegal things that happened in the past, and anyone institutional is afraid of this, and even if you tell them, look, this is a security, it's just digitized on the blockchain, which happens to be a perfect platform to digitize a security in a decentralized way compared to traditional alternatives, there's still the word token, the word crypto makes them think that this is a scam or that there is no asset behind, et cetera. So I think that we could all benefit from calling these digital securities and make it more legitimate and more similar to traditional securities, but digitized with lots of efficiencies.
Great. So Ryan, so you have the unique experience of having raised capital both for a fund focused on network assets, native digital assets, as well as now through Framework, something that's focused more on hard assets and real estate. So maybe take us through the pit. I presume largely institutional money was coming in. Maybe that's incorrect, but to the degree you can kind of contrast those two experiences.
Yeah. So raising money for a token fund is a unique experience. Because if you go down the well-trodden path of raising money for a venture fund or a private equity fund or any other type of fund, you talk to family offices, institutions, foundations, endowments, all the traditional players, and you get all kinds of questions that you would not expect, for one. But you're basically trying to convince them of the merits of a relatively new asset class, and these are not folks who are generally comfortable taking risks. They don't know how to understand and underwrite. And so it's a big ask to ask them step out of that comfort zone and trust your judgment on this new asset class. That sounds very technical to them. And so it's difficult for them to grasp that. And so we ended up not, a couple years ago, it was really hard to raise from institutions. You're starting to see some crypto funds raise money from endowments and foundations now. I think you've already seen a lot of family offices commit capital to the space. And so we've gotten a lot of people sort of off of zero. But at the beginning, it was largely high net worth individuals who were willing to basically take that risk because they viewed it as a venture bet, more so on the people that they were investing in, than they were, underwriting the actual merits of investing in Bitcoin. Because a lot of those people, weren't in the position to do that. So that was a really, really tough sale, and a tough sales process. I think one of the things that a lot of people experience is when you had this massive tailwind, like in 2017. It was probably much easier to raise capital than when the first time they raised funds. Raising money in 2013 and 2014, when there wasn't a single administrator who'd ever, looked through this information. They didn't understand what these exchanges were. They didn't look like any exchanges they'd ever been, comfortable with. They didn't know what tokens were. Trying to find a lawyer, an administrator, all this, to button up a fund was incredibly different. In 2017 and 2018, you've got 20 administrators to pick from. Almost every single law firm has recognized this as a category that makes sense for. So raising money for funds now has become substantially easier, including funds that are investing directly in tokens, because most VCs who touch fintech at all have already put clauses into their LPA agreement that allow them to hold tokens. And most investors, I think, have gotten comfortable with that. So that harder at the beginning, it's gotten much, much easier. And then obviously raising capital for an entity that's raising, a preferred, priced equity round is significantly easier. Particularly, I think this last point is a really important point. For Framework, we don't use the word token at all. When we talk to people in real estate, we never use the word token. We abstract completely away from it. We talk about digital shares and we talk about liquidity. And frankly, people don't the liquidity piece, since it doesn't exist yet, they say point to an asset that's an asset-backed token that has liquidity that's trading. And the answer is that's hard right now to point to. And so they still say, well, what's the fundamental difference between this and the securities I already own? I think that will get easier, obviously, once you have ATSs trading in volume with real liquidity, and then that will fundamentally change the capital raising side. And that's where you'll start seeing investors who understand what that means for their business starting to demand that they get it in that form. But I think we're still a ways off from that. So we're all early still in that cycle.
So you're going to see in 2 weeks that the first digital security or security token that we issued from SpiceBC is going to be traded in open finance. And it's a great thing, and it's a scary thing as well, because we don't know what's going to happen, to be honest with you, in terms of how much the liquidity is going to be there, and whether everything is going to work without any problems, whether the blockchain is going to scale if suddenly many investors come. People don't realize the issues with Ethereum in terms of scalability. Like, we have just reissued the token for SpiceBC using the full new version of the digital securities protocol, and it takes us like 36 hours to deploy several million tokens on Ethereum. So So I think it's great that things are happening. At the same time, people need to understand this is still early days, especially for these changes. I think in terms of issuing platforms and things like that, has moved a bit faster. But in terms of exchanges, the next few months is when we will know exactly what happens.
So just to clarify, when it starts trading open finance, it'll be available to retail investors?
No. So
just accredited?
It was done under Reg D.
Yep.
Therefore, there is 1 year lockup for US investors. And then for Reg S will depend on the jurisdictions of each country, because obviously you have to follow the jurisdiction of other investors. So then the next one we're going to list is Blockchain Capital, which I'm very proud that they've reissued their token using our platform. And that one, because it was issued more than a year ago, it has no restrictions here in the US, which will give us another exposure to how liquidity happens for those type of tokens.
Yeah, so essentially you could just go to the platform, you could register. For one, you may need to show documents about accreditation, but for the other, it would be just kind of open to anyone depending on jurisdiction.
Correct.
Sounds great. So it sounds like the knowledge gap has closed a lot. All of you have raised a lot of capital around this space. What are the gaps in knowledge that still exist? And I know that's different for different investors, but like when you approach investors, what are the myths you need to dispel?
Yeah, I think that you have to have your value, like selling any product, right? There has to be a clear consumer value proposition. Like, why would somebody do this? Why is it better than the way it currently works, right? And if it's just the same thing except it's kind of digital and on the blockchain, I mean, it's nice, that could be wrong, and there may be some efficiencies there, but I don't think it's good enough to get this typical security token type investor, because I think they're looking for some benefit. And so that's why, on the private credit side, if you look at, Goldman Sachs has an offering going around right now on private credit. They're looking at targeting, you have to put in $1 million. They're looking to target about 8%. But you need $1 million. You need to have somebody there at Goldman Sachs who's going to do it. So it's very kind of clubby and cliquish, which I think is one of the big things that we can do here in the democratization of the capital. Like, why is it that the best deals are restricted to the guys up on top? It fundamentally is not fair, right? I mean, everybody maybe should have a fair access to it. So I think that taking specific use cases, that's why I keep coming back to like Securitize high yield, and the reason I do that is because globally, you go to Switzerland, there's negative yield, right? So all investors, whether it's a guy who has $50,000 cash in his bank account or the guy who has $1 billion, are all looking for some sort of secure return on their investment that's consistent, right? So you can go to a retiree who has $100,000, he's like, I can't get that flow I used to get. And that's why I think that's why we've concentrated on that use case with the IBI, is because I know it has global resonance. And then the idea with the IBI, just to be clear, is we are actually just trying to do things, show they work, and then let other people copy them, right? So we're not trying to become a big fund or any of that. That's not our goal. Our goal, but is to show actual, real results of how it could work, and then say, perhaps other people could use this in other ways. And so that's why I think that's one of the things that kind of checks off all the boxes for me as an investor, right? Yeah. I would do it. I think a lot of people in this room, if you had $50,000 sitting in a bank and they said, hey, it's going to be in the US, it's going to be secured by some physical asset at a good loan to value ratio, it's targeting double digit return, like that kind of adds up, providing it's like legitimate, right? And I think that's one of the good use cases, but there's certainly many more in real estate and other stuff as well.
I disagree with it. I mean, I disagree and agree on closing the knowledge gap. I think we've closed it. So we went from 100% of people not knowing what it is to 99% of people not knowing what it is.
Right.
So
right. Yeah.
yes, we've closed it, but it's still far away. Like we live in this echo chamber of hearing to each other all the time, and social networks do a very good job to always order the feed, so I always get your tweets and you get my tweets. So we think like everyone agrees and knows what we know, and that's not true. This is still very early days for the industry, which is a great place to be because, especially as an investor as well, putting my other hat of Spice VC, it's great to be able to invest now because this is where the industry is being formed, and then if you pick the winners, this is when you will really make money, not if you wait until things actually happen, right? But still the knowledge gap is there. The only thing that has improved, I will say, is that when you go and talk to people, crypto is already known, and there is less fear than it was a year ago. Blockchain is already known, and there's less fear than a year ago. But the digital security tokens still, you have to explain what they are, and you have to point to some of the examples that have started appearing in the industry. And then the other thing is how you explain the advantages. It depends on the audience, right? For my experience, is that for people coming from financial services backgrounds or capital markets, it's easier to tell them why this is a good thing, right? Because they understand, the mess that they have with the clearing houses, with the central counter risk people, with the transfer agents, the registries, the central depositors, and you tell them, look, I'm going to collapse this into just exchanges and a compliance layer on a blockchain, and that's it, and they get it. When you talk to people that don't come from the financial services industry, but they know about startups, they just don't understand it because startups don't have those problems, right? They have small cap tables, there's no need for automation, there's no liquidity anyway, so it's more difficult to explain to those people.
So we've talked a lot about money flowing into the funds. Let's talk a little bit about money flowing out of the funds and how you're thinking about assets. So maybe starting with the real estate. So you're based in New York. Will you primarily look at real estate assets in this geographical region or something wider?
So I think to start in our go-to-market, we will focus strictly on U.S. assets. But I will tell you, and I think the guys at Harbor would say the same thing, and you've probably seen the same thing. There's demand globally.
Oh, yeah.
And so, we've talked to people in Korea and Mexico, all around the world, all different types of assets. And when I say demand, I actually mean, supply, people who own assets today. So it's clear to us that there's a lot of there's a lot of interest in getting liquidity for real estate assets. There's a lot of interest in the category. A lot of it feels to me like people want to explore and they want to understand it better. They don't necessarily understand, what it actually means to tokenize an asset yet. There's some legacy like, hey, maybe we're going to tap into people who own lots of Bitcoin, and I have to sort of disabuse them of that notion. I don't think there's going to be a lot of overlap between a traditional token investor today and a piece of commercial real estate. It might be a little different for a VC fund. It might be different for some of the other categories. But in what we're seeing, we're not seeing a lot of that. I think some of the hardest work that's going to be done by players in the space, frankly, is going to be on the demand side, the buy side. Who are going to be the buyers of these assets? Are they comfortable holding and custodying a token? If they're not, what kind of custody solution can you provide to them so they're not actually touching the token at the beginning, but still benefit from the liquidity as it lists on a secondary market? And then finding those interesting pockets of capital that are willing to go down that path. So I think a lot of our energy and effort is going to be really on the demand side because there's no shortage of interest on the supply side.
I agree. The problem today is to find people that want to invest in this asset class, security tokens. People that want to securitize things or tokenize things, it's crazy. Like we get 15, 20 emails per day.
It's easy to get distracted. There's a lot of that noise.
But you have to be very selective because there's also people with a lot of ideas that they're never going to raise any money, so you better don't touch it. So I think selecting the good projects that make a lot of sense and that they're also suitable for tokenization, which is not everything. Like a startup raising $1 million, I think they should just do a Reg CF with Republic or something like that, and they'll have an easier time raising $1 million, and there is no need for them to have liquidity. They're not going to have any liquidity anyway in the secondary market. The automation piece of security tokens also doesn't apply because they're going to have small cap tables. So I think you need to pick the right assets. My view is that the bigger the better at the beginning, because those will be easier for people to understand, and they will get more liquidity, and then we take it from there and tokenize the world, but in the next 10 years.
So I have a question for you, Carlos. Because one of the things that we, have concerns about is you end up with, listen, there's very little liquidity in small and micro cap stocks.
Correct.
Right? And so, we might have a small building that, has $10 million of equity and $20 million of debt. How much liquidity, the question is how much liquidity is there going to be at that end of the marketplace? So we have our thoughts on that. But I wonder what your thoughts are on for like an LP interest of a fund. Are you going to actively pursue or try to recruit market makers or people who will be liquidity providers to the marketplace, or how do you imagine that liquidity will actually work at the beginning?
So the first, in terms of liquidity for security tokens, this morning the guy from NASDAQ, he said, security tokens are not going to improve liquidity. I disagree with that statement. I think they will improve liquidity because they are going to be marketed globally. And that's going to make a big difference because obviously you can tap bigger pools of liquidity, and also the fractional ownership facilitates liquidity. So I'm a big believer that these asset classes will be more liquid than their equivalent on purely, like if you list a company on the small cap NASDAQ or something like that. Yep. Now, that said, liquidity needs to be there, and you need to, bring brokers and market makers, et cetera. We're not actively trying to do that. We're just trying to facilitate it, doing intros to the exchanges of the people that come to us to make sure they are the ones that work with those people to provide the liquidity. And then from our side, what we're trying to do now is try to be as transparent as possible in terms of communicating the value of the asset, the NAV of the fund, and things like that, so people have a reference of what the liquidity is. And then, also be there. We have some provisions in our PPM that allow us to buy the token back if it falls below a certain price compared to the NAV. So we are avoid falling down too much and things like that. But I think that the responsibility for bringing liquidity is not from the issuer, it's from the exchanges, which they're going to make money with the trade, and therefore they're interested in having liquidity.
Great. Well, we're just about out of time. Let's do one or two sentence kind of final statement or forward-looking statement. Go ahead.
I think we're at the very, very beginning, and as somebody else said, which is very true, having seen the internet kind of get where it is, basically all the promises is back in the late 80s, early 90s of the internet that I was at conferences like this talking about. Right now they're true and you can see them, but that's a long time. And so I think there is going to be a huge multi-trillion-dollar change in the way things work, the way capital is formed and traded, but we're at the very early innings.
Yes, I'm going to try to be more positive. We're at the very beginning, but I talked to Stephen for the first time a year ago, and the amount of progress in a year of this industry has been amazing. And the amount of bright minds and people coming here, people that approach us because they want to work with us, new cool projects that are coming up, this is amazing. And I think that we'll be surprised about the amount of progress that we're going to see the next 2 to 5 years.
Final thoughts?
Yeah, so at DG, we had a thesis from the very beginning that there were basically two primary use cases for a blockchain network or distributed ledger technology. The first was hard money, and the second was transacting in private securities. And so there will be lots of other things that will be tried, but to me, those were always going to be the two major categories. And I think, hard money is again, going to play out over decades. This will also play out over decades, but the amount of energy and interest and capital going into it will force it to happen faster than it would otherwise. And so we're bullish.
Well, let's thank our panel.